Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital, and joining me today would typically be Michael Becker, but he's in the middle of another due diligence walkthrough on some properties. So good for him, good for his group. But of course, joining me today is our guy down in Austin, Hans Box. Hans, how are you?
Doing well. Thanks for having me, Paul.
So we're on our tour of Central Texas, kind of figuring out what's going on in Central Texas. And we take the drive down from Dallas and we go south on 35 and we go past Georgetown and Austin and we go to San Antonio. And if you take a hard left, you go to a little town called Houston. And so we're going to talk a little bit about Houston and see what's going on in Houston. So in the podcast today, we have, I would say, the Dean of Multifamily Real Estate of Houston, the guy that knows probably more than anybody else of multifamily. He's been doing it for a long period of time and just a general wealth of knowledge. Tom Wilkinson, thank you very much for joining us in the podcast. We appreciate that.
Happy to be here.
So I'm going to kick this over to Hans and let's get it going.
All right. Well, Tom, we've known each other for a while, and I kind of know your history and what you focus on, but we'd like to communicate with our listeners and maybe give us an overall brief professional history of what you've been doing as a broker in the Houston area and before, and then of your firm itself and the markets you cover, and what do you specialize in?
Well, I'm an apartment broker, and I sell Class A, Class B, and Class C apartments in Houston and other parts of Texas. Mostly Houston. I've sold only 665 projects so far, but I'm working on trying to do better.
665, Tom?
Right.
Yeah, all right.
That's a little bit.
Yeah. And I also sell other things too. I sold about $5 billion worth of real estate. But I work for my wife, just so the company's KET Enterprises, and those are her initials, and and I don't get a salary. I'm a person who works on an allowance. I get a small allowance.
I always wonder what KET stood for.
Right. She's the sole shareholder and reminds me daily.
So tell me a little bit. I mean, when did you start in multifamily? How long ago was it?
Well, I got my real estate license in 1972 when I started University of Texas. Got my MBA here. I went to Rice undergrad. And then I went to Houston and did various things, bought foreclosures, did some commercial work. And then I ended up working for a guy named Bill King who ran for mayor. He was with Columbia Savings, and I started brokering apartments for him. This is like in 86 when nobody had money. He had a new savings and loan, so I was able to help. And I had gone pretty much broke in 86 because the market went from what we own went from 100% to 40% in 8 months. And so I worked for 8 years just trying to pay my bills and eventually became a Chapter 7 person. But in any event, that's how I got started. And once the Columbia Savings went broke, I figured I'd become an apartment broker because that's what I knew. And so our company started in 1990. My wife's, as I said, the sole shareholder. And at first we made no money whatsoever. And it was just me. I had a laptop computer and I learned how to work Access and Excel and Word and email. And then later, as we started making money, I got a secretary. And now we have myself and one other broker, and we've got 3 admin.
Okay. And you guys are focused on the Houston market.
Yeah, we're a boutique firm. We sell about 10% of the property sold in Houston, but we're guerrilla warriors, not Gorilla, Guerilla. We try to move real quickly, and we work mostly off-market.
Okay. And so for our listeners, what do you mean by off-market when you say
Off-market means the seller has told us they'd sell the property and given us permission to show it to some folks, but they don't give us a listing. So we don't put it on LoopNet or put it on, any website, or we don't even hardly ever send it by email on any kind of blast. What we'll do is figure the 3 or 4 or 5 people who are good candidates for it and try to convince them.
And why do a lot of sellers do that? What's their thinking and their psychology of why they don't want to blast it out?
Well, for a couple of reasons. One is their staff doesn't get overwhelmed with tours. I'm guessing that's the case. And sometimes they just want to keep it confidential.
Yeah.
I'm not always sure, but sometimes people will pay more for off-market deals. Buyers like off-market deals because they think there's a lot less competition, which is true.
Yeah.
Right. So it sounds like to me then you probably have a select group of or not select, probably a large group of buyers that you contact based on the deal that's available. So it's good to know, Tom.
My close friends I have 1,800 close friends, but they don't all see every deal.
Of course. Okay. So I'm sure it's on everyone's mind that there was some terrible flooding in Houston, obviously, that had greatly affected all types of real estate, especially residential real estate and apartments and single-family homes alike. You had mentioned you guys sell about 10% of the properties in Houston that trade.
Right.
How many overall multifamily units are there at a high level in Houston?
There's 300 to 400 trades per year. There are 6,000 apartment projects in Houston and about 600,000 units.
600,000 units. So do you have any idea on how many of those units were affected by the flooding?
Well, there are 3 or 4 people who are giving statistics. One is Bruce McClenny with ADS. He thinks it's 18,000. Stacy Hunt thinks it's 30,000. I'm more inclined to believe 30,000 than 18 because my list, I can show several areas where there are more than 1,000, like in one property.
Yes. Yeah. In fact, I'm in a deal where 35% of our property is under 4 feet of water.
Right.
Yeah, Still?
So it was. Now we have a $4 million, hopefully, insurance claim.
Well, there's some interesting components to the insurance. One, of course, is that if you were not in the 100-year floodplain, you probably didn't have flood insurance. And more importantly, you didn't have business interruption insurance. And the problem is it takes months to get a property turned around, and you don't have rent if you don't have the business interruption insurance. Stacy thinks that half the folks who flooded, which might be 15,000 units, did not have flood insurance or business interruption insurance.
Wow.
Fannie Mae has given a 90-day moratorium on payments, which just kicks the can down the road.
Sure.
Other lenders are giving some moratoriums as well, but there will be no magic bullet that will solve it. FEMA doesn't have the money to rebuild the apartments. There's not going to be any grants from any place that I know of. And CW Capital, which is a company I work with a lot, thinks they have exposure to 10,000 flooded units in Houston. They think that some percent will be foreclosed, but it'll be a while. Remember, 90-day moratorium, and then more time to be delinquent, but if you have no income, you can't pay the mortgage.
Sure.
And a lot of groups aren't well capitalized enough to be able to pay the debt service, for a year.
Right.
With no income.
Right. So I guess that kind of leads us to, what opportunity might there be? Obviously, it's a terrible situation, and we have people that lost their homes and investors losing their money. But at the same time, these properties need to be repaired and fixed. And so where's that capital going to come from? And do buyers that are looking for today's hot apartment market, are there deals out there to be had?
Well, one comment I want to make, will work around your question. There are not a lot of apartments that are formally listed right now. I had one listing I got 38 offers on. Finally, I begged the owner, please, let's just cut it off. I've been there 50 times. I don't want to go anymore. So there's not been a lot of product on the market because owners have been making lots of money. I mean, they were 90 and 95% occupancies. These properties that are flooded are either 50% or 0%.
Right.
Neither of which is a financially viable situation. So when I was in Scotland on my vacation, I got all these calls on my cell phone saying, I want to buy all your flooded apartments. And, that was like the day after the apartment's flooded. Well, no one's ready. CW Capital thinks it'll be 6 to 9 months before we start seeing a lot of foreclosures or people starting to sell because they know they can't make the payment.
Right.
So I think the prudent investor would be ready to move but would wait until there's a lot of opportunity out there.
About 6 to 9 months from now.
That's my guess,
Most
yes.
likely. Okay.
Insurance claims take a long period of time. So, like we talked about loss of rent insurance, a lot of people didn't take that
Right.
piece. Sometimes even a fire claim on, say, 8 units could take up to a year to get processed and done. So, I see a lot of foreclosures coming down the pike, and Fannie Mae, who's not going to come back in to refinance or finance that type of stuff. So you're going to have a lot of cash
Right.
to buy these opportunities.
Well, it might be $10,000 a unit or more to fix the units.
At least.
Yeah. Some people do it cheaper, but you'd be skeptical of buying that product.
Yeah. What do you think about labor costs? That's always been the big push, is that right after the flood had happened, we used to get a lot of flyers trying to get people to move from Dallas down to outlying Houston areas because they wanted to pay them $25 to $50. Well, they were making $13 or $14 in Dallas, and they're trying to give them incentive that they'll have work for the next 2-3 years. Are you seeing labor costs go up?
Well, I don't operate apartments, but I'm sure it is. I do know that hotels and motels are full. However, FEMA has announced they're going to only make payments through the end of October. And I think that there'll be more demand for apartments as a result of that, and rents should rise.
If I recall, before the flood, Houston was hovering around 90% occupancy.
Right,
as a market.
and we were trending downward a little bit.
Right, because of the dearth of supply, mainly in the uptown, in the central part of Houston.
All the new construction had a lot of vacancy. That's disappeared overnight.
That's so that we're back up to what, 90, above 95%.
We're probably 91%, but it hasn't gone up that much. But there's been a big shift because people moved out of flooded apartments into Class A's. So Class A's have basically burned off their vacancy for the most part, unless it's a Class A located nowhere near the flooding.
Mm-hmm. Mm-hmm. You weren't physically in a flood zone in your house.
My house is 50 feet above Buffalo Bayou. It came to the front porch.
Ouch.
Wow. 6 houses below me all flooded on the street. None of us were anywhere near the floodplain. But we all had flood insurance.
Yes, that's a lesson learned. My brother actually lives in Katy, which you wouldn't think would be flooded. Katy, Texas,
pretty far
out west.
But Katy had a lot of flooding.
Katy
especially
did.
East of 99.
And his house flooded. He had flood insurance, but even better, he sold it 2 weeks before Harvey. And he told the people that were buying his house to get flood insurance. And luckily they did. But most of the people in his neighborhood did not, unfortunately. And these are nice neighborhoods. It was a really terrible thing. So, when we're talking about single-family homes and people that lost their homes, I would assume that also is another data point because you've got a lot of people that didn't have flood insurance and can't afford to rebuild.
Right.
Or now may have, because they may lose their home, may have bad credit, and they have trouble buying another home or building a home. And so they now may become renters who weren't going to be renters before Harvey.
I officed across the hall from a developer, and a woman who lived in an expensive house that flooded came to rent, and she showed 2 checking accounts with $600,000 in it, and showed all this big financial statement, and showed her husband's $30,000 a month pay stub, and she said, "Can we qualify?" "I don't know because I've never rented an apartment." And of course they said, "Well, yes."
Yeah, I think occupancy in Houston and demand for apartment units are only going to be going up and stronger over the next probably 2 or 3 years.
How about insurance? I mean, on these buildings, what's your prognostication about what's going to happen with, one of the things we have a line item is property taxes, but the next one is insurance. I mean, what's your take on what insurance on apartment buildings is going to do down in the Houston area?
Well, I've called several insurance agents, and they say that the insurance companies probably won't change the rates till they see what their loss history is next year. I mean, they got to run 2017 and see how bad they did. Then they'll adjust the rates. But insurance ought to go up. Another thing, the city of Houston has an ordinance that if you're in the floodplain and you flood, if the cost to repair is more than 50% of the appraised value of the structure, not the land, they may not give you building permits. And that would really affect the Greens Point area, which has been flooded several times, maybe 7 or 8 times in the last 10 years.
How about people that this is not their first or not their second, but this is going to be their last flooded house? Are you starting to see some of your neighbors say, "I'm out of Houston, I'm going someplace else"?
A lot of houses in Meyerland, which is southwest Houston, all of a sudden which is low, and they're requiring them to raise the houses up. They're starting to sell their houses for lot value.
Interesting. So there's going to be a lot of changes, I think, in Houston over the next
and
year
uncertainty.
or two.
When there's uncertainty, there's often no action.
Yeah. And how about the property markets that you work, that actually the properties were not affected by the floods or anything?
There is an expectation that the rents will go up. The people in Katy who had new construction or newly leased up were giving 3 and 4 months free, and
That's
they
right.
eliminated that. And some of them raised the price $300 per unit when they had 50 people applying per day. They may have problems with price gouging.
Yeah.
At some point, I think these flooded units, many will come back on the market, but it may be a year or two. We are having positive job growth and virtually no new construction starts. And so this is a kind of an overnight sensation that's probably a really good thing for Houston on average.
Mm-hmm. Yeah, so had the construction...
Not for the victims, I'm saying, but
sure.
I think long term it's
business.
Sure. The construction starts, those had already slowed down before Harvey. Is that the case?
Right. Yeah, the number of new starts is virtually zero. I mean, starting from today on, it's you guys are lenders. I think it's very difficult to get a construction loan for new construction in Houston.
Yes, it is.
And the equity is like, say, no.
Okay, so we have no construction,
Right.
less single-family homes, less apartment units, possibly some apartment units that have been foreclosed on. So it sounds like there is some opportunity in the Houston market for buyers that
Three
have
to 6 months.
3
I
to 6
think.
months,
Right, yeah.
and then there may be a large amount of opportunities. Then it probably will trickle on for the next year or two as people try to hold on to their apartment units and then can't because of
Right.
they run out of cash. So it sounds like it's going to be a busy year or two for you.
Well, let us pray.
So kind of backing up a little bit from Harvey itself and just looking at Houston as a whole. We haven't discussed Houston a lot on this podcast before. In relation to Dallas, San Antonio, and obviously Austin's kind of its own animal in Texas, what are the approximate purchase cap rates for B and C class assets you focus on in
There's
Houston?
been cap rate compression in the Class C. Curiously, I was selling stabilized Class C on a 7 cap, and now they're selling on a 6.5 cap. And prices, curiously, for nicely rehabbed properties has risen to like record territories. But part of it is there's a very limited amount of product coming to market.
Right. So it sounds like to me it's the same as Dallas. It's a really hot market, and you've got compressed cap rates and a lot of competition.
Right.
It's just that you may have more supply now soon. And I would assume that some buyers have been scared away from Houston.
Oh, a lot of capital. I went to Blackstone in New York, and they said we have $16 billion to invest, but not a penny for Houston. But let me know when it gets better, Tom.
And the lenders also are a little bit more careful with Houston. I believe Houston's a pre-review market. What is that, Paul? A pre-review market?
Well, what does that do for Tom? I mean,
A pre-review means it's just slower to get Fannie Mae. I mean, they've got to go look at a lot of things before you can submit your application.
Right.
so pre-review with Fannie Mae really means is that it probably maxes out at 75% leverage, but they would like it at 65, and it's going to take a waiver, and they're going to have to take a look at the package and make sure they understand the operator, making sure they understand the area and understand the management of the property. Fannie Mae just sometimes may have just too much exposure to Houston, and so they're careful in delegating the money out. Not to say you can't get a loan in Fannie Mae or Freddie Mac in the Houston area, but they're just a little bit more careful. It's a pre-review market. There are some parts of the United States that are pre-review. It's not just because of the hurricane. It's been around. It's been for almost 15 years. It's been a pre-review market. So even before the hurricane, there was concerns about Houston is one of the largest apartment markets in the nation, and Fannie Mae just has so much exposure to it, so they want to take a second look at the deal, making sure that they'll give the higher leverage. But they typically max out at about 75% of the deal. So you got to bring some additional cash to the Houston market if you want to move forward on the deal.
Do you see the overall economy in Houston strengthening now? We've had some weakness over the last year or two when oil prices were depressed, and I think oil's gone up a little bit since then. Overall, what is your take on the Houston economy? What's your confidence in the economy, and what do you see over the next 2 to 3 years?
Well, very strong market. We've had the largest population growth of any city in the United States since 1900. We've got the Port of Houston, which is a giant economic generator. They're going to add 100,000 new jobs because the containerization facilities are full. They need to excavate the port and dig out hundreds of millions of cubic feet of sand and dirt to let the big ships go through.
And why are there bigger ships? Does that have something to do with the Panama Canal?
The new Panama Canal, which I visited about 2 years ago, was this giant hole. Now it's full of water, and these ships aren't much wider, but they're way deeper. The Panamax ships are way deeper.
Okay, so the Panama Canal, by being widened, has created jobs for Houston.
Correct.
Okay.
Yeah. A lot of the shipping used to go to Long Beach, California, and they had so many union issues, which we don't have so much at the docks, The car manufacturer in Japan decided to ship the cars to Houston through the Panama Canal. If you think about it, Houston's in the center of the country, east-west.
Sure.
So it's easy to truck things out of Houston to other places.
It's a perfect distribution point.
Right.
So we're near the Panama Canal, and we're in the center of the United States. So.
Right. Houston is undergoing a big industrial expansion as well. There's several places I know there are 2 million and 10 million and 20 million feet of new buildings going in that are basically filling up. And in areas like that, like around Beltway 8 and I-45 by Intercontinental Airport, there's millions of square feet of new places for blue-collar workers to work with union labor, but there's no new apartments. So the apartments that are being nicely rehabbed are getting pretty high prices.
And this is industrial distribution type.
Right, Amazon and Home Depot and a lot of those places are up there.
Well, you saw a lot of B and C properties, and you probably get a lot of calls from California, investors wanting to buy into Houston. What's your story you're telling them today?
Well, if you buy something on a 6.5 or 7 cap rate, that's double the cap rate you pay in California.
That's right.
I don't know how you can make a deal in California work with less than 60% down payment. I don't know how the loans work. I mean,
Well, you hope for appreciation is my
well, that's
guess.
their prayer, right? So the prices are much lower, and if they're smart, they'll move to Texas because there's no state capital
income tax.
gains, no income tax. I know several people from California who, when they were selling their stuff, moved here just to avoid the gain.
Smart people.
11% is what the capital gain is.
And so, but for us girls, what's the best area to invest in Houston?
Well, it depends on what your attitude is. Houston is a very interesting, diverse place. Some people only want the nicest, newest, shiniest properties, and you're going to pay up for those and buy them on like a 4% or 5% cap rate. That's Class A. Class B trades for 5.5 to 6% more or less, cap rates, and then Class C, which is my specialty, is trading in the 6.5% range for things that are stabilized. People will buy them lower cap rates if they think the price per pound is good. They take the price per unit and add to it their rehab costs and try to get a better return than 7%.
What gets a deal into a buyer's hand these days? Is it hard money? Is it the relationship they have with you? Is it the highest price in the market? Do newbies who don't have a track record have to overpay for the property to get the attention of not only you but also the seller? What are some of the reasons? What are some of the things that the buyers have to know coming into your market?
That's a great question. When I get offers from people we don't know, I will present them, but it's useful to provide proof of funds and large amounts of earnest money. The standard is 1%. More earnest money means more likely to close. Non-refundable earnest money subject to title, environmental, survey, and seller closing helps open a lot of doors. And the price. Having a good track record is helpful. I don't need to see proof of funds from someone I know owns 13 properties.
Yeah.
But there's lots of room for people to come into the marketplace. I mean, I wish I had 40 100-unit properties. I had 38 offers on one. It'd be nice if I had another.
So it sounds like there's a lot of competition out there. So for a new buyer coming into the market that you don't know, they probably would be good to put together like a biography resume.
Right, a resume is good, and proof of funds either in the form of a letter from the bank or better yet, either a Merrill Lynch statement with the account number crossed off, blacked out.
Yeah, that actually is in their name, not somebody that they found on the internet.
Right. No, I have proof of funds I've collected over the years, and I could easily give you lots of proofs of funds, but they're not mine. Right. That's exactly right. That you have to tie it to you in some way. Right.
Yeah. What are some of the amenity packages that you're seeing in some of these properties that you're selling? And so what are the buyers looking for to put into some of these properties? I mean, what's the hot deal besides the dog parks and the computer centers? Is it the package rooms? Is that a big deal down here?
Camden won't let you get packages at the property, which I think is a poor marketing decision. I mean, from my perspective. Anyway.
Why is that? Any
They
idea?
just had too many packages, I guess.
They just decided to ban it. Camden's a large apartment.
And they're great guys, and if they're listening, I commend them. They're smart people, but I don't know. I would think that might be an issue. But the most important thing at the property is to have a really nice looking office, have friendly staff, and have a unit that looks nice. People judge it by the outside and the unit they look at, and about the staff in the office. And if you resolve those things, you're in pretty good shape. But I've seen people buy properties built in the late 70s and put $15,000 or $20,000 a door into them, new thermal pane glass, new doors, new cabinets, new flooring, new tubs, new tub surrounds, and they get premium rents in areas you would think would be not attractive, like south of Beltway 8. There's some people getting $1.35 rents. Those are almost Class A rents, and this is a deal built in 78.
Wow, south of Beltway 8.
Yeah, or on I-45 near the Intercontinental Airport.
Wow.
There's all the industrial expansion is right there, and there's no new apartments.
So it's a demand issue.
It's a demand issue, right? The Class A blue collar people will pay to get a good product.
Right.
And how about areas like Port Arthur? What do you think about that?
There's a property in Port Arthur that a Fannie Mae lender sent me out to on Sunday, where there's debris everywhere and the 100% flooded, and the owner didn't have flood insurance or business interruption insurance, and it's a nonprofit. That's code for no money. The lender is worried that it's going to be a total loss because they've only remediated 2 units.
So Port Arthur, Beaumont, they were hit as harder than
They
Houston.
they were, right. Port Arthur is a very blue-collar area. I've never sold properties. I've sold some stuff at Beaumont, but like I said, I went there and it looked pretty grim. But I mean, there's obviously business activity there. And I'm sure if they fix the apartments, it'll come back. But
Yeah.
if they don't fix the mold, it's going to be a real mess.
Sure.
Yeah, and that's the worst thing about water is the mold that comes with it, and
Right.
it shuts the property down and makes it highly deadly. That you can't live in there and you can't work in there, and whether it's your office building that has mold or the place you sleep at has mold. This is not a good thing, but it does put a lot of people to work to get some of this stuff remediated and worked through. But I'm certainly concerned about a lot of foreclosures coming down the pike. But that on the reverse hand, the opportunistic thinking that we have is that maybe that's an opportunity down the road.
I agree. I think cap rates may actually increase a little bit in Houston with these foreclosures happening. And I also think insurance is going to increase, which is going to put pressure on NOI, which will put pressure on cap rates. When there are 2 Cat 5 or close to Cat 5 hurricanes to hit the United States in the span of a week, 2 weeks, with hopefully no more to come, that drives up the global insurance markets. And I can promise you insurance rates for a named windstorm will go up for multifamily properties in Houston.
Well, also flood insurance too, because if you went back a couple of years ago with the Hurricane Sandy on the East Coast, we had a direct impact down in Houston too. What flood insurance costs had an impact in Dallas.
Yes,
I mean,
it has an impact everywhere because the insurance companies have spread the risk and they have to make their money, so it'll affect all rates.
Well, I think the federal government's been subsidizing the National Flood Insurance Program for years, and maybe that's one good thing our president might do is fix that.
I don't know where they're going to find the money.
I don't know either.
If they charge the rate that it cost,
Yeah,
then it'd be all right.
that's true.
So you have a couple gray hairs in your head, and you've been in this business for a long period of time. What's your prognostication of Houston? I mean, how long do you think we're going to be down? How long do you think occupancies are going to be up? I mean, was the normal back 6 months ago before the hurricanes happened? Or is it going to be, what's it going to look like after 6 months from now? What's it going to look like out there?
Well, we've really basically had 2 storms in Houston. One was the fall of oil prices, which I was terrified when oil went from $125 to $25 or $30.
That's right.
I thought we were toast. But in fact, Houston's a very diversified place. We've got the world's largest medical center. We've got the ship channel. We got the NASA folks. We've got lots of distribution, lots of transportation, and we've got oil and gas, and they're still there.
Yep.
Even though there's less of them, there's still lots of people making money in the oil and gas business. And they figured out how to make money at $50 a barrel. And as long as we stay near $50 a barrel, we ought to be okay. I think Houston's a very strong place, and I think it's a great place long term. We need to do something about flooding. I am concerned that $800 million has been collected by the city of Houston for flood abatement, and I can't personally point to anything that's been done. Now, I don't know all that's been done, but it's not obvious to me that anything's been done. So that needs to be investigated.
Where are all these people going to right now? I mean, I know they're going to Katy and other places, but are they actually physically leaving?
I think most people are either living with relatives or friends or in a motel or hotel or in shelters. Yeah. But when FEMA cuts off that's going to be interesting.
Yeah,
there was a huge increase in unemployment claims. Unemployment claims went up to 65,000. It's the biggest it's been in years.
Wow.
Because businesses were, I guess.
I just saw it in the paper. I didn't see what the reason, but I think anyone could get a job cleaning out apartments or picking up trash
or construction soon.
Construction, I would think, ought to be in high demand right now.
Right.
Tom, tell us a little bit more about your business. I mean, you're out there pounding the tables, trying to figure out where to get a listing from. I mean, it's competitive for the buyers to find properties. It's competitive for the listing agents to find properties. What do you do something that's a little bit different besides just being the guru that kind of knows it all?
Well, our company, we typically have 3 slots, and one person is missing. I am looking for someone, by the way, eagerly looking for someone. Hopefully with an MBA. I have better luck with MBA or JDs than young people off the streets, 22-year-olds. I've had some younger people, but I like people in their 30s. I know I'm being ageist. I'm 69 years old, by the way, so I'm judging people by them being at least 30 years old. Please forgive me. But anyway, we have a database, and it's got 7,000 properties in it, some Houston, some other places, and we split it up. So I have a third, and the other guy who's there, Hashir Salim, my senior broker, has a third, and then there's another third that's just sitting there fallow. We don't have time to get to it. I mean, I make lots and lots and lots of calls, but I never keep up with my database. So I could probably use a fourth person in point of fact. But you know what? I try to figure out when people want to sell. When their loans are coming due is a good time. When they've missed payments is a good time. When they haven't paid their property taxes is a good time, you know. Or there are other events. I mean, you know, partnerships have a certain life set to them, you know. But you have to ask the question over and over. So if you owned apartments, you'd probably have heard from me in Houston, you know.
So you've done this for a long period of time. So you think that the market is still a very good market?
Although the number of sales is greatly diminished. The number of sales is probably off 35%, maybe.
In what period of time?
January till now, this year.
And part of that, I would assume some of them got interrupted by Harvey, I would assume.
Right. A lot of things got postponed or got killed by Harvey, but prior to that, you know, there was people were feeling very wealthy and intelligent because they bought apartments and were doing, you know, they bought them at a low price and the price went up. So there's been a lot of reluctance to sell. If lenders make it harder to get loans, that would make more property sell.
I would imagine because you're so long in the tooth in this marketplace itself, servicing companies that may be getting these properties back want to get your opinion of value or kind of have you figure out what's going on. So you would probably be a good asset for people that are thinking about making an investment in Houston to spend some time and get to know you.
Sure.
Because, you know, you have the direct relationship with the seller servicers, the people who take care of these mortgages and kind of figure out what's going on. Would you agree with that?
Yes. Well, I do a lot of work for lenders where they ask me my opinion about buyers and properties.
Yeah, I think that's a critical piece. I mean, I think Tom is definitely plugged in. And if you're thinking about making an opportunity happen in Houston, he's the guy that I would talk to. I see his stuff all the time. In fact, we're working on a transaction not with Tom, but somebody else. That just yesterday we got a loan application. So it was our first loan application since Harvey to be approved down in Houston on a little small Freddie Mac loan. So we're still keeping our fingers crossed that the insurance will be there when we go to close.
Well, my guess is come May of next year, there'll be a change in the rates, but not for now.
Not right now. Okay.
Yeah, it'll catch up though, unfortunately.
Any advice to any buyers coming into your neck of the woods, Tom, about your experience level? Anything else that you'd want to share with anybody?
Well, if you want to buy real estate, you cannot steal in slow motion, and that means if you see a deal, make an offer. It doesn't mean you have to buy it. I know people who have analysis paralysis, and they'll sit there and ask me about the thread count of the screws in the wall, when in fact they're missing the big picture.
Yeah.
I like that quote. You cannot steal slowly.
Right.
So some great information. Hans, anything else more to ask?
No. Other than we have a lot of buyers out there listening to us that are looking in various markets, and I'm sure Houston's on their radar. So what's the best way for the buyers to contact you, and if they want to talk, and current owners that may live in Houston to contact you?
We have a website. It's called ketent.com. Our company's KET Enterprises, named after Kathleen Ellen Tyrell, my boss, and my wife. That's probably the best place to go.
That's great.
All our contact data is there.
Great.
And you speak Chinese too?
Yeah. Wa putong wa shwara buhao. That says I speak Chinese or Mandarin poorly and slowly.
That's pretty good. So
yeah, it's passable. Heavy northern accent, Beijing style.
Oh, that's great.
Yeah, you even have a Chinese accent.
Yeah, which I didn't know.
So that's great. So I think we appreciate you coming in, Tom, and talking with us a little bit and just educating us a little bit about what's going on with the aftermath of Hurricane Harvey on the Houston multifamily market. Kind of explain to us a little bit about what the future is in multifamily and the opportunities that may come down the path, and maybe whether it's 3 months or 6 months or a year from now when these properties will be foreclosed upon because there's no insurance that's available, and maybe properties that are not affected by the hurricane, and maybe just some great class B and C properties that you may have an opportunity to sell people. So thanks for coming in. We appreciate that. Tom Wilkinson, we appreciate it. Hans Box, thanks for coming in, spending some time. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.